We thank you very much for joining us. Welcome to Business Incorporated. I am Pusin Amafaye. We appreciate your time this Friday, the 18th of March. South Africa's Reserve Bank raises its benchmark repo rate as it tries to tame rising inflation, despite fears about waning economic growth. And the International Monetary Fund concludes Article 4 consultation with Botswana, commending Gaborone's track record of prudent economic policies. And of course, two of Nigeria's largest cement makers, Ashaka Cement and Lafarge Africa, reports disappointing 2015 earnings. Well, let's start today's program from South Africa, where the Reserve Bank has raised the benchmark repo rate on Thursday as the Southern Africa's economy tries to tame rising inflation and fears about waning economic growth. Central Bank Governor Leseja Gango said the Monetary Policy Committee remained concerned about the weak growth outlook amid negative business and consumer confidence, but it assessed the risks to the growth outlook to be on the downside. The Reserve Bank raised the repo rate by 25 basis points to 7% after a 50 basis points hike in January 2016, as South Africa sees inflation averaging 6.6% in 2016. The bank's target inflation at between 3% and 6% and said the breach of the upper target remained a serious concern. Meanwhile, South Africa's Deputy Finance Minister, Sabisi Jonas, says he rejected an offer by a wealthy family with close links to President Jacob Zuma to take up the position of the Finance Minister to replace former Finance Chief Nhlanhla Nene. The President in December changed Finance Ministers twice in a week, first removing Nhlanhla Nene and later his replacement, sending the rand plummeting, alarming investors and triggering financial turmoil in Africa's most advanced economy. The Gupta family on Wednesday denied offering Jonas the position of Finance Minister last year.
Members of the Gupta family offered me the position of Minister of Finance to replace the then Minister Nene. I rejected this out of hand. The basis of my rejection of their offer is that it makes a mockery of our hard-earned democracy. The current economic climate presents many risks for our country, which require responsible leadership to avoid a full-blown crisis.
It's very sad to think about that the Guptas is running our country and not our President Zuma.
All right, let's get a sense of today's European trading. It's been a very busy week so far, from the U.S. FOMC, that's the Open Market Committee introduced a decision, to the Bank of Japan and the UK's budget for 2016, as well as the planned corporate wedlock between the Frankfurt Stock Exchange and the LSE Group in London. So let's wrap up the week. Avi Aguedas, financial correspondent, DWTV for Channels Television, live now to us from the Frankfurt Stock Exchange, and we're starting with the German DAX. Javier, good afternoon to you. European markets, ups and downs, and the German DAX is swinging. Talk to us about that. It's Friday.
Hi, Bosun. Yes, we are seeing a trading session that is quite interesting, with a lot of volatility, with a lot of ups and downs, and this has, at least in the case of the DAX, the main German index here at the Frankfurt Stock Exchange, to do with some technical reasons. Basically, some of the possibilities for investors to buy shares expired today, and that always causes a little bit of a shake-up there. So all in all, there's, I would say, nothing to worry about. We are seeing slight gains right now, but that might change, so we'll see how the trading session develops. That being said, investors are still very cautious. They do not want to get into any risks because there are still some question marks on how the economy is going to develop in the near future. So all in all, what we are seeing here is investors essentially waiting to see how and when the next corporate and economic results of the different economies are going to look like.
Yes, next week will be very interesting. And the DAX there across your right shoulder looks heading north. But let's talk a little bit about the euro-dollar face-off. What's the impact for the European equities market? Have you?
Well, you know that after the decision of the U.S. Federal Reserve to keep the interest rates, and after the announcement especially that we will have 2 interest rate hikes probably this year and not 4 as many had expected, the dollar went down a little bit, and that means that automatically the euro gets a little bit more expensive. Now that always causes a bad effect on the European stock markets, because the euro's price also means that the exports of the countries here in the eurozone are going to be more expensive for foreign customers in different countries to buy, and that usually hits up the sales a little bit. Now the impact has not been that big. We are seeing that the euro is recovering from that initial impact, but it is still a situation where, as I said, there is caution because we don't know how it's going to develop.
Javier, we're heading for the weekend. What do you consider as the most head-scratching story for the current trading week?
Well, I would say it is, in fact, a combination. The combination that you actually mentioned before we started speaking, it is the action of the central banks. This was definitely the week of central banks. We had still a little bit of an impact of the European Central Bank's decision of last week that was influencing the trading sessions on Monday. And then, of course, came the U.S. Federal Reserve with the decision of keeping interest rates. We are seeing the same action by the Bank of England. And we also saw other central banks of smaller countries like Norway and Switzerland also essentially aiding the economy. So all in all, what we have been observing so far this year is investors, experts, and governments saying, this is not what we expected. We all thought that the economy was going to be a little bit stronger, and now they turn into the central banks, which have been aiding them. The only problem is that these measures have proven not to be that effective. So I assume that we will all see investors demanding the results of these policies and of these measures. Until then, as I said, caution is in the agenda. The DAX is set to end the week a little bit higher than it started it, but this is definitely not the sustained recovery that many were hoping for, Bosun.
So let's sit back, enjoy the weekend, get some stress out of the system of ourselves. Come back on Monday. We'll continue the conversation as we head toward the final end of March and the end of first quarter. Javier Arguedas, financial correspondent for DWTV Channels Television, standing for us, as always, the Frankfurt Stock Exchange. Now, not a number of people were surprised yesterday when the chief economist and partner at PricewaterhouseCoopers Nigeria, Andrew Navin, says Nigeria's GDP will outpace South Africa by as much as $30 billion in 2016. More about that after the break. Stick around. We'll be right back.